McGuire, CEO of XM Australia. As stated, Peter, finally the Biden COVID bill was passed last night. All equity markets hitting more records by the day, and now oil, after a few days of downward trend, seems to be now pointing upwards. So all green arrows.
Well, good morning, Sean, and good morning, panel, and welcome from Sydney. That's right. I mean, that Dow was bid up around about 1.5%. We've got that US dollar, Sean, that's back at that 91.8 off those highs earlier in the week. And Asia equities, Australia was a flat line today, but across the board, the majority were well up, some up nearly 2.5%, and still a couple of hours to trade. Some were a little bit down as well, but it's a mixed bag. But when you're saying that as far as the commodities, crude, it's been all over the shop. It's been a trader's delight. And that Brent has been just, volatile, and that's what traders want. So from where we sit, it presents wonderful opportunities, and that whipsawing is not a bad place to be.
I mean, from a week ago, Peter, it feels like we're back where we were, although a lot's happened in those 7 days.
Yes, exactly right, Sean. I feel as though some of that, look, we understand Biden and getting that through. A lot of it was baked in, but there could be further uplift over the next couple of days as far as US sentiment and general, those good numbers that came out last Friday, of course, were non-farm payrolls that really shot the lights out at 380,000 versus consensus at about 200,000. So that momentum, we're coming into April or mid-March, April, Easter just around the corner, and hopefully a little bit better weather and, COVID we put behind us.
Dr. Carole Nakhle, CEO of Crystol Energy. Carole, welcome. 1 week after, if you like, the morning after the night before, it looks like OPEC Plus made the right decision. What's your call? What's your thoughts now 1 week afterwards, having seen the gyrations in the markets and general macro outlook?
Yeah, when OPEC made the decision, they kept on reminding the world that demand outlook remains cautious. Maybe, things are looking better. But just to add to what Peter was saying about the interesting numbers, what I found most astonishing was the OECD's figure for the US economic growth. They doubled that figure compared to their December outlook. So largely based on two things: the fiscal stimulus as well as the vaccination rollout. So from just around 3% to more than 6%. Not only that, Sean, they say there is going to be a positive spillovers for the rest of the world. So they add another 1% because of that to their economic forecast for the rest of the world, with some major partners with the US, such as Canada, the EU area, benefiting a lot from the fiscal stimulus. So there's a kind of, if you want, a souffle. And what OPEC did is just added to this kind of sentiment. And this is where we saw the upward pressure on prices. But again, you know me, I don't like to follow daily or short-term movement in prices because we don't get much sense of the direction, because 1 week they go up by 11%, another week they go down by 7%. And I don't think this is going to change. So now there is a upward lifted mood for the sentiment towards the market, but who knows what's going to happen next week. So we don't have a stable direction. We have more volatility in the weeks and months to come.
I included two stories in the digest today, sort of the yin and the yang. The 1.9 trillion COVID relief bill passes, and this story number 7, U.S. budget deficit hits a record for a month, $311 billion. I had to read that a few times, thinking, is that annual? That was 1 month, the month of February, $311 billion. It's no wonder you can send checks of $1,400 to everybody. When is the consequence, do you think, for this? I know we're hearing noise of taxation and so forth. What's your macro crystal ball saying, Carole?
I think as soon as the economy really picks up, we're going to see the taxation creeping back. In the UK, if you want, took the lead into that direction a couple of weeks ago with their budget, but nothing really dramatic, but budgets do change. So I think as soon as we see the economy on firm grounds and, the unemployment is down, because mind you, the US Federal Reserve is focused on full employment. So as soon as they get closer to that target, I wouldn't rule out taxation coming back. And here I want to add one more thing. We don't have to wait for general taxation. We can expect perhaps higher taxation on certain sectors. And here the oil and gas industry would be an easy target.
Yes, indeed it would. Let's move across to Eastern Europe, where, of course, we get the perspective on how things are shaping up in that neck of the woods 1 week later. Dr. Andrei Belyi, professor and founder and CEO of Balesene. Dr. Andrei, we had commentary finally out of Russia yesterday, signaling some concern that non-OPEC plus oil producers could come back into the market. What are your thoughts on that and the outlook of this deal for the benefit of Russia?
Well, Russia views the OPEC plus deal as something that needs to be kept, without an exaggeration and without, let's say, any soft approaches. And of course, yes, the rising price is a certain concern, because then more producers come in place. But we have to remember that Russia has to balance itself between a need of higher prices and a need to keep a certain level of production, of output, and also help, let's say, the closest allies, which are Kazakhstan and Azerbaijan, in having certain level of output, and they had actually difficulties in cutting it down. Without mentioning all the independent, smaller Russian producers who suffered from the cut. So it can be that at some point Russia may propose to soften down the quotas and to increase it in order to allow, let's say, the situation to be balanced back. But as I said, OPEC plus agreement remains a priority.
Peter, we had, as noted by Carole there, data on the OECD upgrading its forecast for the year. But we also had the Chinese come out over the last few days and give us their sort of target number, if you want, 6% growth for 2021. That was seen as modest. What's your own sense for the outlook for China growth over the year ahead and its impact for oil demand and oil prices?
Well, first off, Sean, I think the oil demand will be fairly strong. So and the rebound, possibly that 6% is just a line in the sand, and under promise and over deliver, the old mantra. You've come out of a COVID year, so if you shoot 7.25, well, we perform better than what we thought. So I think that there's the first part. The second part is, if prices stay at these sort of levels, then that's going to be a very strong global demand and very strong global economy. Certainly from the producer standpoint, some of the consumption side from the consumer is going to be, I think, fairly tough coming out of that COVID year. It's going to be, I think, quite hard across the majority of Asia and certainly into India. So whilst we look at those numbers, also take on board those numbers that India are forecasting, it's going to be a very, very solid 21 and certainly into 22. If we don't get a rerun as far as any further COVID, it should be a good year and a half for all the commodity sector and, of course, growth.
Dr. Carole, the ink isn't even yet applied to the COVID bill. Biden due to sign it apparently today or tomorrow. And we're already now hearing from the administration talk of yet another infrastructure stimulus bill that could be as big as $2 trillion as well, being put on the table over the coming months. What's your own sort of view on that further stimulus? At the same token, economies back to sort of growth and normality, and can all of these things coexist and inflation kept at bay?
I mean, already the current stimulus, there are lots of fears and concerns about its potential impact on overheating the economy and causing inflation and therefore detrimental effects to the US economy and also spillovers to the rest of the world. So let alone discussing another stimulus. I mean, you're talking here about one of the biggest, if not the biggest, fiscal stimulus that we've seen in the US. And then you want to add on top of that, I doubt the latter will pass unless there is some maybe a massive change in the virus, a huge mutation that would justify the slowdown, significant slowdown in the economy. But I personally doubt that the economy can sustain an additional injection in the economy. And then think about the longer term effect. I mean, how governments are going to pay back cover back the deficit that we discussed earlier. And I want to ask you actually, Sean, when Peter was talking about the growth in the summer, you have been vaccinated twice. How many trips have you taken to date?
None. Yeah, so that's the answer. I mean, one of the things I would say in terms of my particular vaccination, as my son was asking me today, when are you going back to the office? And I said, well, once the Chinese Sinopharm gets certified by the WHO and has some kind of sort of medical certification around it and certainty, I'll feel a lot more comfortable. But until then, I'm still wondering when I might be able to get Pfizer.
But you see, this is the point I'm trying to make here, is that everybody seems to be expecting a boom in demand by the summer because vaccination would have spread much more, hopefully, around the world. But there's also a downside risk that it's maybe people will still be concerned about jumping on a plane. And that's why I used you as an example. I know it's a very small sample to represent the rest of the world, but there's something to keep in mind about this rapid growth.
Well, the other thing that even if I wanted to travel now, there's so many inconsistencies. Like obviously we do a lot of work in neighboring countries here, and I cannot travel there even if I wanted to, with all sorts of restrictions still in the region. And that's the same, of course, in going to Europe and elsewhere. So even if country X, Britain, for example, in Europe seems to be the front of the class in terms of everybody vaccinated, will they be able to travel anywhere when there is still so many restrictions around those things? And that's going to be an inconsistency across at least the second and third quarter, one would think. Andrei, what is the outlook on that issue in the context of your area and vis-a-vis Russia and Eastern Europe, the advancement of vaccinations?
Well, you may see that actually Russia is using the Sputnik vaccine as a certain, let's say, diplomatic tool and uses it quite successfully. And it creates certain tensions within the European Union member states, which basically gives another spiral to more, let's say, geopolitical concerns there. I personally do not think that neither of the vaccines creates a spillover effect in stopping the virus. The virus will stop by itself at some point and without human help. But unless a miracle happens or something like, but even some studies showed recently that within the current rate of vaccination, you need to have 7 years in order to beat up the virus. And I mean, without speaking about new variants of the virus and so on.
We start to see that there's some European, obviously the EU has been challenged in its rollout of vaccinations, and we've seen the Italians turning to Sputnik, and obviously that's creating some tensions at a time in which the EU is trying to put some squeeze on Putin.
Exactly, that's my point, that actually the Sputnik by itself is an interesting symbol that Russia uses in order to show to the European Union that there is no European Union as a political force. There is a certain economic bloc, there is a trading partner, which is a good trading partner, we like them very much, Russia says, but there is no, let's say, don't pretend to be political leader. And that creates a number of tensions, which we also observe in the case of Nord Stream 2 project, right, that we have discussed already many times, which likewise, similarly to Sputnik, somehow doesn't make sense either. I mean, if there is no Nord Stream 2 or there is Nord Stream 2, nothing changes on the gas market, but it's a symbol. It's a symbol which Russia advances in order to basically create a division, internal division within the European Union. And quite interestingly, that could be a news story which you may not have spoken yet about. First of all, Gazprom announced a joint delivery with Royal Dutch Shell of a carbon-free LNG. And Germany stating that relations with Russia should be reinforced on the climate agenda. Both news give Russian gas sector a new impetus on the European agenda. And
including Nord Stream 2?
Also for the Nord Stream 2. So let's say the balances now towards Nord Stream 2 completion, and German, let's say, insistence and persistence on having the Nord Stream 2 have increased. And quite interestingly, I watched a debate on the Atlantic Council where one very good German expert said the following. The fact having Nord Stream 2 will not undermine our political stances towards Russia. Let's separate the issues as they are. And that's actually the German position, which is not shared, for instance, in Poland, Baltic states, without mentioning the United States. And
I'm sure Mr. Navalny will be getting a little indigestion hearing the Germans say something like that. Peter, meanwhile, back in your neck of the woods, we had a pretty strong statement overnight regarding the situation with Taiwan and the U.S. The top U.S. military officer in the Asia Pacific, Admiral Philip Davidson, telling Congress that China could invade Taiwan within the next 6 years, and the Chinese sort of screaming back that he was being hyperbolic. How sensitive is that issue, do you think? It sounds, obviously under Trump, it became quite elevated. Should we expect that tension to remain elevated around Taiwan? You're on mute. Sorry, Peter.
Pardon me. Before I answer that one,
yeah,
a couple of hours ago, we had the Japanese Prime Minister come out and say that they are standing by our side in the sense of the team of 4 in Asia, which US, Japan, Australia, and New Zealand. So they've got our back, and we hopefully have their back. So that's very, very, very strong words to come out of Japan. So
anything specifically triggering that, the coal issue, or what?
No, very much along Biden coming out, and I believe that they're talking in the next matter of days as far as that team of 4 or that quad group. So there's the first part. So Japan is very conscious of our involvement through that whole Asia basin, Asia Pacific more importantly. So yes, they're an ongoing issue, Taiwan and China. We all understand that. 6 years. There's talk that General Michael Flynn's brother might be taking over that role in on the west coast of America as far as the Pacific. He'll be the acting general. So it'll be hard to see. Hopefully, how am I going to put this? Hopefully we don't see anything raise its head as far as China and Taiwan, but it certainly is. It's a sleeping dog there, and if you kick it hard enough, I'm sure that things will probably escalate in the years to come. And as they're saying,
well, I think if you look at that other part of that narrative that we saw surface recently in the US, where I think it was General Motors had to close down one of its assembly lines because they couldn't get a sufficient number of microchips in order to assemble their cars. And Taiwan produces more than 50% of the world's
That's right.
microchips. I mean, that
Yes.
is in of itself a sort of a national security issue as you think about all of the pieces in which microchips go into. Taiwan is an absolutely critical asset on both sides. And I think that only becomes heightened, and hence maybe one of the reasons why we're seeing tensions rise there, and there are many others. Let's go to the survey
Absolutely.
question for this morning and see what that offers us in terms of outlook. Given the powerful signals from the US reopening narrative, $1.9 trillion today, maybe $2 trillion coming on infrastructure and other things, it suggests that the path of least resistance for oil prices in Q2 is higher. There seems to be resistance on the floor, but less resistance going upward. That's the sentiment. Agree or disagree with that statement? Carole, looking forward on that point, we're always only a few weeks away from an OPEC plus decision now. So given everything and given the sentiment of that question, do you think finally OPEC plus pulls the trigger when they meet on April 1st?
We already heard some noise from the Russian deputy prime minister saying that there is, room because they are concerned about, this is the same story, that they are concerned about additional supplies coming back to the market. But Sean, it's interesting if you compare this original schedule in April 2020 with what has been happening since the summer, since they changed, the whole direction and the decision, they kept on rolling over production cut. You see that by now, OPEC should have had no more than 5 million barrels a day in terms of cuts to be relaxed until April 2022. Today, they have more than 3 million barrels in addition to that they are going to roll over for several months to come. So the picture has changed. At some point, they will have to relax. Yes, some may argue that they want to sit on the large spare capacity so they can have control over the market. But at some point, there is a basic, historical experience and evidence that when you have a combination of high prices and massive spare capacity, actually discipline weakens. So at some point, OPEC Plus, cannot continue to simply roll over its accumulated production cuts, and they will have to revisit their decision and relax, especially if prices stay at this level. And they also don't want to boost supplies from outside the organization. Again, people continue to dismiss shale. In the US, they talk about the new discipline of companies there, that they want to generate dividends and not really growth in production. But it's never like this, never black or white. These are investors, they are aggressive investors, they are risk takers. And yes, some investors might be more conservative than others, but it doesn't mean that when prices increase, they will just sit there and watch. So on balance, at some point, OPEC Plus will have to relax some of its cuts. Otherwise, it will have too much to manage.
Dr. Andrei, another story that went by a little bit underreported this week was Turkey and Russia yesterday inaugurated the construction of a third nuclear reactor in southern Turkey. This relationship seems to be getting quite cozy, even though there's still maybe some tensions in Syria on the ground. There does seem to be a fairly solid relationship now between Russia and Turkey, Putin and Erdogan. What's your thoughts on that?
Well, no, certainly, if you look at the macro geopolitical picture, Russia never hidden that Turkey is used to break NATO from inside. And that was always said. Though it's quite interesting that some Russian experts in Moscow recently declared that, look, having stronger Turkish influence in Azerbaijan, for example, or also rivalry with Turkey in Syria and Libya, is still a better option than having the West being both consolidated and influential. So that's a red line which needs to be understood. That's kind of like the core point of the Russian approach towards Turkey. Regarding nuclear, it's true that Rosatom, the state-owned nuclear producer, is quite interested in expanding its capacities, and I think that they would have done it regardless the Russia-Turkey rivalries, unless there is an open war between the two, which is highly unlikely. But you can understand, as they say, business is business. We separate the business from politics. We just build the nuclear reactors and we go for it. And
I think it's also a reminder that Putin brings America back into the world of geopolitics. It's not the same as 4 years ago. Things have changed. There is things like the Russian-Turkish relationship. There are issues that make the rehabilitation of the JCPOA more complicated because of the other interests that have to be considered.
Certainly, and Turkey seems to me to be a headache for the United States because they don't really know what to do with it. It's the crucial ally for NATO and for the United States in the region, but it doesn't behave in a way that the United States would like to, and that's indeed a big headache for the new American administration. And their rapprochement towards Iran will be another headache because Iran will not behave either as the Americans want to.
I mean, we had the Foreign Secretary of the US say yesterday that they were not going to, they draw their line, if you like, they were not going to engage unless Russia or unless Iran became compliant with the JCPOA. And of course, that's red lines on both sides. Meanwhile, there's missiles falling on the Aramco facilities last weekend. And in that vacuum, one has to expect that things get worse before they get better. Let's go to the survey result before giving Peter the last word and let him go out from sunset surfing. What is the survey result today from Irene? Is she going to give it to us? Oh my God, look at that. 50-50. That's a weird one. So the least resistance for oil prices in Q2 is higher. There's a big number in this room that don't think that's true. Peter, your thoughts on that? The direction of travel after this wobble of the last week. We went up above 70, we came back down again. We're having a little bit of a bounce this morning. Is this a trend line or are we going to be stuck in the mid 60s?
Well, I think we're going to be stuck in the mid 60s, Sean. I want to see where that US dollar trades over the next matter of weeks leading up to Easter. If it stays above that 91.5 and, you know, that between 91.5, say 92.5, then I feel crude prices will probably be, unless we see something dramatic from a geopolitical, there's no problem. I don't see any global problems like 21. So we're coming out of that. So I think crude will stay around that, you know, that 64 to 68 trading range. After Easter could be a different bag altogether. As we go into that Northern Hemisphere summer, the demand picks up. Biden becomes further, I think, embracing that presidential position that he holds. He's been very quiet over the last matter of weeks. So I think that crudes are, I don't think a lot of smart money's on it at the moment. It's whipsawing and there's no really directional trade, Sean.
Okay. Well, let's wrap it up there as we come to the end of the Middle East week, but there is still more legs in the Western markets and one to keep an eye on. I think is the point that Carole mentioned at the beginning is, you know, where is the new dawn as bright as the markets are baking it in? Will the vaccinated jump on the airplane for their summer holidays or even for smaller holidays or travel business and so forth? That question remains out there. And what does the over the horizon look like? Lots of debate around that still. And I suppose until that's clearer, maybe these markets will sort of go sideways for a while. Andrei, thanks so much for joining us this morning. Peter from Australia, and of course, Dr. Carole in Germany, thank you so much for your time. Have a great weekend, everybody. We'll catch you all on Sunday for the weekend review. All the best. Thank you.
Thank you. Bye-bye.
Thank you, Sean. Thank you. Bye, guys.